Mr. Berry, once again, thank you for joining us for this very important bell ringing ceremony. It always feels great, when you come to this floor of Bombay Stock Exchange, because this floor has seen many booms and many busts.
Right, absolutely.
But straight off, I'm just going to talk about the general environment. You said that one side demand is a issue, but on the other side, the good news is that commodity prices have come down. Prices
Absolutely.
for wheat, prices for sugar, prices for milk, everything is down. So has that translated into a better margin outlook for you?
So you're right. So we've got tailwinds as far as commodities were concerned till now, and we've had headwinds as far as demand was concerned. So our efforts have been to make sure that we somehow generate the demand by creating interesting options for the consumers to try. But as we sit here and speak, the commodity prices are starting to go upwards. Right? So if you were to look at it, the international prices, whether it's wheat or it's oil or sugar, the international prices are low. However, because of the demand situation, because of the agricultural economy, the government has put some duties and increased duties on wheat and sugar. As a result of which, we are seeing in the last 3 months, we've seen a 30% increase in the sugar price. And we are starting to see the wheat prices also go up. So there is going to be increase in the commodity prices. However, thus far we've had about 250 basis points of improvement in margin because of the commodity prices.
Your margins have expanded for about 10 quarters in a trot, from 6% to north of 10%. That's extraordinary in a very tough and a competitive environment. Volume growth also has been very impressive. How much more to go? How much more to go in terms of expansion?
So we don't give future forecasts, but what I can tell you is that the planks that we focused on are the following, right? So first of all, it was most important for us to get the right people to run the business. So I'm pretty delighted with our team today. We've got a very good team. We've driven volumes through, first of all, distribution. Distribution, we had sort of slipped in the last 6 or 7 years. So we've strengthened distribution. In fact, we've doubled our direct distribution in the last 3 years. And we've focused on 3 brands. So we've got 5 pillar brands that we are focusing on. We've brought in innovation, to the fore, especially in the premium end of our segments. We are also looking at cost efficiencies. Now, cost efficiencies has played a huge role for us. Now, what does cost efficiencies mean? It means our entire supply chain has to be more efficient. Whether it is our plant, which used to be smaller plants, now we've got much larger plants which give us better efficiencies. We've got high-tech ovens today, which obviously are more efficient than what we were using in the past, a lot less energy consumed. Our biscuits travel a lot less in terms of distance, so that's giving us a lot more efficiencies. But the most important, and to me, which is very critical, is we've reduced waste dramatically.
Can you give me a number?
Well, if you think about waste, and if you say from where to where, we've almost reduced waste by almost 70%. So still, 30% to go. We cannot get to zero is what people will say, but I would say that why not?
The business mix for Britannia seems to be changing. I mean, you are present in the value market, but that is not your focus area. The focus area seems to be dairy, and the focus area seems to be the premium cookie market. Walk us through that strategy.
So the focus area is, at this point in time, it's biscuit, cake and rusk and international. We've made some big strides in the international business as well. Dairy is work in progress. I certainly feel that dairy, because it's such a large segment, it's, in India, all of us have, or most of us have grown up consuming dairy products. It's an 85,000 crore segment. And we've been in this segment for almost 16 years. And in these 16 years, we have a business which is, approximately 400 crores. So we haven't made as much progress in the dairy business because of various reasons. We are in the process of really deep diving into this and establishing what is our right to succeed. I know I've spoken about this before, and people must be saying that he keeps saying that and doesn't come up with the strategy. But you will see in the next 3 months a genuine attempt at creating a very, very robust dairy business for Britannia. So that probably is our biggest opportunity area. At this point in time, it's certainly not the focus area, but for the future, it's a big opportunity area that we are looking at.
Dairy, as of now, is less than 5% of your total turnover.
Absolutely.
Can it go to 20 in next 5 years?
Well, I would say 20. I won't give you a number for that, but I would say that it can certainly go from a 400 crores to a 2,000 crore business, because we also consume a lot of dairy in our bakery business. Okay. Right? So it just synergizes through the entire portfolio, and certainly offers us a pretty good opportunity.
Is dairy a better margin business, a higher margin business than your traditional existing business?
No, dairy is not a higher margin business at the current point in time. And you've got to realize that dairy is dominated by cooperatives. The objective of cooperatives is not to get profitability to the company, but there are lots of areas, lots of segments within dairy which offer the right profitability, and we are going to focus only on those value-added segments. We certainly don't want to do liquid milk in poly pouches. So as we embark on it, obviously cheese is one of those segments which we are very, very strong in. But we will evaluate each one of those segments and get into those with the right products.
What about cookies? That's one of your mainstays right now. That's one market where per capita benefits are clearly visible. Premiumization, if I may use that word loosely, is actually visible.
Yeah.
Will that be your mainstay for next 2 or 3 years?
So within biscuits, cookies is the segment which is growing the fastest, and I would think will continue to grow fast because we have made a huge foray into the premium end of cookies, and competition is also doing some interesting things in that area. So I do think that when 2 or 3 players start to focus on a segment, the growth tends to be a lot more than what it normally is, and I do think that that's going to continue for the next 2 or 3 years.
Is there a lot of disruption happening within the FMCG space? For the longest time, the FMCG space we've seen is being dominated by 2 or 3 players, 4 or 5 players who are fighting for market share. Now there's a global company which, or ITC is trying to gain more market share. Local companies are also, coming in. Do you smell or sense disruption in the FMCG space?
No, I don't sense disruption because the competition in our space is fairly rational. But what does tend to happen is that when you are in a situation of low demand, it does tend to put pressure on companies to do irrational things. Because, if the growths are 15% and someone's growing 20%, someone's growing 12%, it's fine. A 12% growth is a great growth. But when the demand gets down to a 5% and someone's growing 12% and another player is not growing, then that's where the irrational behavior starts to come in. So we have seen a little bit of irrational behavior from a trade discounting standpoint. People have started to, give larger discounts in the market. Our competitors have started to give larger discounts in the market. And it's very tempting to do that because, that's the last port of call, right? When nothing works, you grease the trade and, you get some volumes going. But to my mind, that's a short-term measure because this demand situation is not going to last forever.
So are you focusing on profits or market share?
Well, I certainly look at the golden triangle, as I call it, which is we have to get growths, we have to get share, and we have to get profits. Now, that golden triangle doesn't happen often, but our strategy has been to get that, and for the last 3 years, we've been achieving that.
So, mission is to reach there.
Yes.
Give me 2 or 3 categories where you've gained market share.
Well, if you think about it, most of the categories that we operate in, we've been gaining share in. So if you were to sub-classify segments, the only area where we've lost big time share in the last 10-15 years was premium creams, which is that entire cream segment. We've made some moves there. We've gained share, but not as much as I would like to, because we were at one point in time at about 75% share. Now we are down to 30. So that is one deficient segment as far as I'm concerned. But other segments, most segments, we've been doing reasonably well.
Are there any other new categories which you are attempting to move into, whether it is the breakfast cereal or whether it is salty snacks? Are there any categories which are there on your platter going forward?
See, if you look at the macro snacking portfolio,
namkeens, like what we call them.
Yeah, no. So if you look at macro snacking, the largest is biscuits, followed by the salty snacks. As you know, namkeens is a sub-segment of salty snacks, because there's Western salty and the Indian salty, which is the namkeens. So that is the second largest. Then you've got chocolates. So if you think about it, we will have to source business from these segments. Now, I don't think we are going to go head on and fight a Lay's or head on and fight a Mondelez in their domain, but we will create products which will get us some kind of business from.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.